to another episode of the XRP podcast. Of course, today is going to be a good one because we have none other than Mr. Brad Kimes. How are you?
I'm doing well, Paul. How are you doing, man? Thank you for having me.
It's going to be a good show because we are going to break down some of the biggest topics that are out there and how the timing is setting up perfectly for what Ripple is doing and, of course, what crypto is doing in general. You've got everything from Mag 7 and hyperscalers that, of course, are projected to spend like $700 to $800 billion on CapEx. That's this year. And it's mostly AI, infrastructure, data centers, et cetera. But the point that this plays into is the whole idea around machine-to-machine payments. What we're talking about, you and I have talked about this before, is Agentic.
Yeah.
What that's going to look like, we're going to see streaming compute, tokenized assets are going to need fast, cheap, neutral liquidity rails. This is where XRP, from a low cost and high throughput design, really starts to fit into this. When you think about right now, this time in the era, because you're old enough to remember the dot bomb with me.
Yeah.
I was a young engineer in Silicon Valley. The internet was born. I had no idea. I was so stupid. I didn't know what I didn't know, and we were essentially witnessing a massive wealth transfer at that time. This is in 1996 to around 2000 before we saw the dot bomb. Do you think we're there right now with crypto and AI?
It's such a great question that you're asking and the time that you're asking it, right? Because honestly, Paul, I do believe we're at that moment. Like, this is the inflection moment for me. I literally just said this to a friend of mine, a family friend of mine. I think this is 1995 going into 1996, the moment before the Telecommunications Act is passed and set the dot-com era in motion. That's, I believe, how important the Clarity Act and the Genius Act are together, but certainly the Clarity Act and Market Infrastructure Bill.
Well, you look at, I'll share some things with our audience here. Let me bring up a quick screen because this is kind of interesting. One of the key points from, I think it was the AAFMA, if I can pull it up, because here it is. Let's share this right here. This is the kind of money that's moving into the space right now. This is Mag 7 CapEx, okay, R&D. You can sign it. Look at that. This right here, ramping. We are talking into what eventually will be trillions, okay?
Yeah.
Then you look at data center spend, all of this. Now, people always ask me, well, what does this got to do with crypto, Paul? What does this got to do with crypto? And I'm like, listen, AI will need one thing other than energy. Do you know what that is? Payments, baby.
Yeah, exactly.
Payments. And of course, the company that's going to be out there doing a lot more of that, of course, is going to be Ripple as we start to see XRPL really advance in this area. When you think about that and the opportunity that this is representing right now, because this is I think a very logical step for Ripple in general. And I know Ripple X, we've talked to a couple of their team. They've got a lot of things happening in development at Ripple X, which is really kind of that next step of innovation. Do you think Garlinghouse has like a secret plan of really advancing utility into maybe this layer of what's happening in AI?
I do, Paul. And I don't have any knowledge other than my own speculation of the moves that I see taking place by Ripple, the company, right? Let's just unpack that for a second, like where you've set it up. Look at the acquisitions. In the early days, we heard from Ripple, for people who aren't aware, the idea was to start in these really small exotic corridors that don't have a lot of liquidity. Let's say Thai baht dollar between the Mexican pesos. Not a lot of industry and transacting going on between those $2 pairs, right? Or some other very low exotic pair. So the idea is that they conquer these small illiquid markets and then grow and grow and grow until they can get to a place where they can handle and service much deeper markets like the euro and dollar market eventually someday. The funny part about that is, though, Paul, and I agree, I think that is absolutely valid, and that is something we've been seeing take place, in the processing real payments and utility they've done on the ledger. But let's look at the actions of Ripple. What has Ripple done? Well, they went out and they bought Hidden Road, which does $3 trillion a year. Then they went out and bought G Treasury, which does $12.5 trillion a year. Now, does that sound like small exotic corridors to anybody out here? Or does
Yeah.
that sound like Ripple is preparing for the open traditional financial market to use this innovation and technology for the betterment of their business and
Yeah.
customer?
Well, I think you look at just all of the strategic plays that Ripple has made. Some of the things that are playing into this now, and I just wonder. I was even watching a little bit around what Pantera Capital was saying on CNBC this morning, and they basically said the same thing. They said, "Listen, we're probably going to see Ripple going head to head with Swift
Yeah.
uh, very significantly." And this, of course, is traditional Wall Street saying this.
Yeah.
The result of what Pantera was going at was that there may be a weakening in SWIFT and the EU. Remember, Georgia Maloney, did you
Mhm.
hear this news? So she's moved.
Tell me.
Okay. All right. So she's the prime minister of Italy,
Yep.
moving these massive amounts, basically all the Italian gold reserves,
Yes, I did hear
trying to move that out of the EU. At some point, when you start to see gold reserves shifting into all these nations away from the centralized EU configuration, eventually you're going to need, you know, mark to franc. You're going to need the lira to franc. You're going to need the lira to the pound. There's only one way to do that. So if this is starting a domino effect, if you think Hungary's already talking about this, Slovakia's talking about it, I mean, we could see within the next 2 years a completely fractured EU, which would break apart SWIFT
you. Yes.
dramatically because there would be no need for it almost. And Ripple would be setting up in the perfect spot. What do you think about that?
Well, I think you paint a perfect picture of what we're watching take place. We're watching, and you know, to your point, the U.S. Treasury Secretary said he took the job of U.S. Treasurer to because he believed that we were in
Yeah.
a grand economic reordering of the financial system globally. And you know, this is what you're speaking to. What
Yeah.
you're talking about is the fractionalization and the redistribution of how they hold and move money around the world. This points to not only the fracturing of possibly the EU in its current construct, but look at BRICS coalition,
Yeah,
right?
exactly.
Look, look at the effort that President Trump did with going around with the tariffs and the trade deals.
Hmm.
That was specifically to counter the momentum that has been made with the BRICS coalition. And along his trade talks and tariff tour, he was telling everybody periodically, if anyone in BRICS debases the dollar or decides to ditch the dollar, we're going to tariff you very
Bingo.
high or
Yeah.
100%, right?
Yeah. And that's the point I'm getting at is that
Yeah.
at some point you're going to be dealing with this. Was the video right here where we were talking about this next. And it was kind of interesting. Even I love Good Evening Crypto guys, Abs. He's such an amazing
Yeah.
guest. We get him on the show
It's great.
often, but he hit it. I mean, they hit it pretty much. Even the Solana investors know what's up here.
Yeah.
And it seems to me when you think about a real bridge asset, and then you consider everything that Jensen Huang has talked about. He simply has forecasted $1 trillion annually in data center build out. You're not building this to basically just be at some point be an AI engine.
Yeah.
You're building this to generate revenue.
That's right.
And the way that this is going to happen in all of the formats that we've talked to in AI is that the number one killer app, I think, eventually will be agentic AI transactions, and Ripple as a bridge asset for high throughput, especially on institutional payments. Because don't forget, you don't think that AI is just going to be on the retail side. No, it's going to start on the institutional side first.
Yeah.
This is where it's all coming from.
Yep.
So that in itself, I think a lot of people miss what's really coming. So a big deal going forward. Let's talk a little bit about Fed cuts.
Okay.
Here we are the week before the FOMC meeting next week. It's likely that many people would say, hey, is this AI thing a bubble? Are we getting into that era now? Because, we kind of have seen this before. What are your thoughts on the Fed right now? Do you think we get the quarter basis point? How do you think this plays out into quantitative easing?
You know, this is interesting that you bring this up because, first of all, we know rate cuts usually stimulate, the markets, right? And then they could take the rate cuts, they get that news, and people go back into risk on assets like crypto and other places. But what's interesting to me is like will we get the rate cut the president wants? Will we not get the rate cut? Will we get half the rate cut? Will we get the full rate? Right. There's all of this going on, Paul. And it all comes back to me that people haven't really drilled down on the conversation the way I think where it came from. Why does he not like Jerome Powell? Why does President Trump not like Jerome Powell? Well, because I think it's because Jerome Powell doesn't like the president. And I think the reason he doesn't like the president is because this administration has made it abundantly clear through the legislation of the Genius Act that the Federal Reserve cannot participate in the
Bingo.
digital on chain economy.
Yeah.
And here we get to the reason why there's such a struggle to get the cuts we want, because they've been neutered from participating in the on chain economy the way that they wanted to. Right? They're not allowed to release a digital dollar. So now we get into what kind of rate cuts are we going to get? Because we know if we don't get the cuts deep enough, it makes it much harder to refinance the debt for the country.
No doubt.
So I think that's really kind of where we are here. But if we get the cuts necessary, I think it's going to jumpstart all the markets for sure.
All right, so let's paint this out a little bit, because this is the strategy I think that will play into a market pump.
Yeah.
Or a market resurgence. I mean, you still have a lot of people pointing to 2026 as breaking the 4-year cycle.
Yeah.
And this may be the confirmation going into what we're seeing in the early part of 2026. And the reason is, of course, Hassett has now been selected as the new chair.
Yep.
You look at his position. This guy's a former Coinbase guy, so he's very crypto ready. The likelihood, back to your point, is that the Fed starts to get defanged a lot.
Yes.
When Hassett goes in, much like what the IRS has been done to by Scott Bessent, who is also the head of the IRS now.
Uh-huh.
And now you have this, and I don't know if it's a threat, if it's a theme, if it's a troll of what Trump is trying to do with, hey, we don't need income taxes. For certain levels. Do you think this is real, or is he just trolling again?
Well, let's talk about this. For one, we know that there's a disparity, right? They're taking in several hundred billion, on track to take several hundred billion in now so far in tariffs.
Yep.
But currently income taxes, I looked this up the other day, take in 2.5 trillion or somewhere around that, right?
Yep.
So there's a huge disparity what they're taking in and what's actually able to do. However, I don't know where the ladder is, like up to 50,000 or 100,000 income or below,
right,
may cover what they're taking in on tariffs, and then they do that cut for a certain salary limit or ceiling.
That's where I think it will come from. Is the tax base will land on the rich, and it will be less, probably very similar to what they're paying now. Probably obviously less loopholes, because if there's no tax, there's no tax code. So now you're dealing with possibly a consumption tax. And if you think about this, every business out there has to buy stuff. Boom. Yeah. you got the explosion happening there. I love Riverside. It's, we have fun with it. But the point being is that you've got possibly consumption. And a lot of people will say, well, no, Paul, it's poor people that pay the consumption. I'm like, I don't think so. Yes, they pay a consumption, and it's hard on people. But if you're not paying any tax, especially because I think the poor now are being taxed more so than they should be, you correlate that to all of the things that are happening in DC. The one thing that would have to occur, and I just don't know if it can, is that the spending has to be reduced.
Yeah.
And that, I know Doge was an attempt. I just don't know. Brad, do you think we can ever get there? A true spending reduction?
I do. And I do think it'll be laddered, and it'll have to be done in segments, because you have corporate tax, you have capital gains tax, you have income tax, you have property tax, right? There's a lot of different structures for taxes. So it's
tax
not just
tax.
right. There's so much out here. But what I'll say to your point, because I think you're on it, I say this from my channel quite often. I think what we're seeing when you hear him talking about reducing or eliminating income tax, you hear current states like Florida and a couple others talking about eliminating property tax forever, right?
Well, you look at Florida. That's a good example. Ron DeSantis, I've talked to this administration many times here in Florida. These guys are running on pure, I don't know how they're doing it. Their budget they have no budget deficit.
Yep.
They're making more money as a state
Yep.
than they can spend.
Yep.
And he's like, what am I going to do with all this money?
Exactly.
I'm trying to figure out ways. So he's cutting. He's like, we just don't need property tax. What's the reason? I've got more money. I've got all the funds I need to run these state people are saying, well, just give it away more, or basically subsidies. And he's like, no, we have enough subsidies. So here's an opportunity to create economic power in a state that could become the next California. Think about that. GDP on Florida. If you take
Without
away
property
property tax, oh man,
You're talking about a boom of a lifetime we've never
there's
seen.
not enough real estate down here.
Exactly. And and I'll say this too, because if you take all of these conversations and all of these targets that are being pursued to eliminate all this taxation, to me, what I see, if we think, let's come back to where we're going here. AI and new market infrastructure.
Yep.
Everything's going to move in a matter of seconds out here, right? Or even less than a second. So money's going to move that way. Why are we going to save all of your tax documents to file at the end of the year when we're all running on an immutable ledger now?
Boom, boom. Yeah.
Fair use tax. This is what I believe they're pushing the world to, is a fair use consumption tax, exactly the way you said it. And the process of eliminating each tier of taxes in each different sector that it exists. That's where I think we go first, and getting it off of the back of the people who earn the least first, so they can have more spendable money, disposable income that prepares them for a consumption tax, because you're not getting tax plus the consumption tax. It just be the consumption tax. But I think that is where we're going globally, pretty much. And certainly here in the US, I think that's the signals we're seeing now. The question is that how long does it take us to get there? And what does it look like when we get there? Because I personally believe you're not really going to be able to do it until you have all of the dollars and all of the transactions primarily on chain.
Yeah.
Because then it can be monitored, and then someone's not tax harvesting or somehow getting around a loophole of not being in the system. And isn't that the goal, to get us all in the system, right?
Well, yeah, I mean, I am a little bit quasi worried about digital IDs. I had a chance to talk to an analyst in the EU. He kind of gave me a professor's analysis of where digital ID is going. Obviously, within the EU, they're working on it right now. It's literally going to be going in effect soon. So that's a little bit concerned, because at some point that connects to CBDC. And I know that here in the US, we are, we have anti-CBDC structured in here, but it's not completely through. You have the administration who is putting a mandate on the Fed where they can't get into CBDCs. But it doesn't necessarily mean that we couldn't have another administration that could change that in the future. So remember, we're still 4-year cycles here. That's why I think this is such a critical time politically for where we are for not only crypto, but I think the crypto lobbies and the AI lobbies probably know this because they're watching this. I want to show you a chart real quick. This will blow your mind, because everybody's saying, well, hey, we're already in the AI boom. It's over. There's nothing that's going to happen from here. There's just no way it can go up. All that stuff, never going to happen. Okay. So I'm going to show you where we are in the bubble. This right here is how much we're spending on AI. See the big red line right there, guys? Yeah. That was World War II. All right. Yeah. The little orange line right there is where we are right now. All right. Now listen, World War II is a big thing. Okay. Yeah. That was a big deal. But we're talking about an infrastructure that basically would change society.
Yes.
Okay. So it would probably be 10x of that red bar right there in terms of how much we're spending right now. So when people tell me the AI bubble is over, I'm like, this is changing society. This is bigger than the internet, because it's talking about payment, digital ID, or at some point, some sort of identification. Then all the world's context and education is flowing into this. And let's not even get into where innovation is going to come from. Okay. You have to put in all the powers of innovation, because remember, in World War II, they were just building military stuff, and that's what they needed.
Yeah.
So you take that times 1,000, maybe. That's the kind of growth that I think a lot of people are missing. And I get, yes, people will say, it's just, it can't be, we're not in that phase. And I'm like, well, you could kind of compare this back to the era of what we saw in 1995 to 2000.
Yeah,
And that was a lot of companies that were blue sky promotion. And there will be a lot of dead bodies on the side of the road.
absolutely.
No, don't count on that. It's going to happen. But the possibility for this slowing down, and this only levers into what's happening with companies like Ripple. And I think Ripple, I hope, Brad, if you're watching this, I don't know if you watch our show, but if you are, I hope that Ripple has really zoned in on this because it's early enough to take a pole position on how to become the settlement layer for AI, or one of. There will probably be multiples. What do you think the possibility of this will be in, let's say, the next 2 to 3 years, where everything is just done on chain, all integrated into AI?
Well, I think you make a fantastic point about it. And I certainly don't have any information on it other than to say I believe Ripple is cutting edge, and Brad and everybody there at Ripple are always exploring the best ways to integrate innovation and technology, whether it's their own or someone else's. And, to your point about this whole thing, is it going to get bigger? Is it going to get
Yeah,
smaller? Are we in an AI bubble? I don't think so. I agree with you. There are going to be winners and there's going to be losers. There's going to be sell offs and peaks and troughs and all of that. But if we're looking around the next 10-year run of AI, we still don't have all of the G20 nations' digital tokenized
bingo.
money
Yeah,
on the rails yet.
yeah,
And what's going to help settle all of that? It's AI, right? And the
yeah.
integration thereof. So I think, to speak to your point, there is so much utility driven, purposeful uh, uh, things left to do and integrate with our traditional finance and the way things are executed. We are years before we see the explosion of AI reach a peak, I believe, for sure.
Well, I want many of you guys watching this show probably don't remember 1996, 97, 98. Many of you probably don't remember before there was Google, before there was Chrome. There was this little thing called Netscape. Um, this is the era that it reminds me a lot, is
Yes.
Alta Vista, Netscape, the
Yes.
early Gopher transactions that you saw from only universities. FTP was pretty much the file transfer protocol used today. I mean, the ancient technology of the internet, which basically still kind of runs it today, that's where we were building in 1996. And when I look at AI and crypto, it just is so similar. It's eerie.
Yeah.
And then I think about, but it's ramped up because we've got social media integration. Now we have the power of speed in terms of online acceleration and velocity. Now you have the power of money moving faster. All of these things, I think at some point we could get to a society where the haves and the have nots are no longer in a problem area, because I think that's the concern I have right now, is that our country is heading for a bad place. But I actually have a book coming out that thinks it's heading for a better place. And it's going to be AI and crypto will be the ultimate unifier that's going to allow people that have never owned digital assets to finally do that, make that first step in basically pulling themselves out of poverty. When you think about that, and here's the thing that has to happen, and I'll show this to you. This is what has to happen for all of this to occur, and that is this whole crypto regulation component. So Paul Adkins hit on this, and he basically said, listen, we're going to do a whole set of carve outs. No action letters are coming. We're going to allow all of the innovators, okay, all of the innovators out there to basically just start building all that you can to change the world. And if the SEC lets us loose, truly lets innovation loose, how big could this get?
Bigger than the internet already is.
Yeah.
Because, to your point, going back to that moment, like you were talking about right before the Telecommunications Act and the early days that you and I so vividly remember, Netscape.
Seemed like yesterday, man.
It really did, and you think about, like, there's many different
4800 baud modems.
exact the dial up, and then somebody would make a call from the other part of the house and cut you off while you're trying to
Boom.
get online.
You're off the internet.
But, going back to that, like,
Uh,
we
those were
all
the days.
realize now that there are multiple layers to the Internet of Information that give us the experience we're using today,
Bingo.
whether it's email protocol, website protocol, TCP/IP, like bed layer for everything to be built on. If we look at that, the way I look at this, because it will be a multi-protocol world, there's not one protocol to run them all. But I do, in fact, see the XRP ledger as the TCP/IP of the Internet of Value.
Yeah.
And then there will be many other layers of protocols that support value and moving of information and tokenized value as well. There are going to be multiple winners, but this is why I've always said, Paul, like the maxis of the world, whether it's a Bitcoin maxi or some other maxi of the world, they have been afforded a luxury that is about to be removed.
Exactly. They were the gold bugs of
Exactly.
the era,
And it's about to
and
be
that's what
removed.
it's so frustrating because I get these people in front of me all the time, and I'm like, guys, come on. This is getting ready to expand beyond comprehension. And you think one asset is going to do it? No.
It's crazy. It's like listen to a Bitcoin maxi, say that, like it's just Bitcoin, everything else is crap or whatever. It's like somebody saying that, I only like website protocols. You know
Yep.
what I mean? And that's the only protocol that matters. You know what I mean?
Bingo.
It's like, well, what about the video protocol? Does that matter for the internet?
Yeah.
Because that's really what this is. But once we get
Really
beyond that
weird.
legislation, it's going to remove that maxi component where you can still be a maxi if you want to, but what
Sure.
you're doing is flying in the face of where innovation is truly going.
No doubt. And well, it's the layers that we're going to see. And I think it's going to be a multi-chain world. We will
Yes.
see a variety of chains rise to the top. It's very possible we could still not even have the full spectrum of what those chains are,
Yep.
too.
Yes. And if
Rip,
we don't have that, Paul, I think we failed.
yeah, yeah. Oh, no doubt, no doubt, for sure. Well, and here's the thing: if you think about failing as a Western nation, we are right now in a battle. There is a war looming with China, and I'm not
Yep.
talking about a kinetic war. I'm talking about a financial and a societal shift
Yep.
war. So whether you want to think Bretton Woods 3, you want to think next evolution around where AI will be going, the amount of opportunity that this represents, especially when you look at China's capex already hitting 700 billion yuan, that was in 2025 this year. Um, these guys are growing at like a rate of almost 50% a year. So
Yes.
for us to stay in pace with them, and this is where China has chosen gold, even though I saw this morning they're buying US dollars, China
Mm.
banks. Did
I
you
did
see
see
that?
that too. Yeah, I
This
did
is
see that.
weird.
Yeah.
Something's up in China. I don't know what it is yet,
They
but
got
I'm
to
going
be
to find out.
hedging the position. They're just
It's the only
hedging right
way. It's the
now.
only
Yeah.
way.
It's the only way.
And then you've got them in a position right now where they are choosing gold as a primary asset. Clearly, Trump and the administration have gone the route of digital assets.
Yep.
So we are going to see the rise of stablecoins. Are you surprised in the advancements of stable coins in such a short time since the Genius Act was passed this year?
I'm not actually, and I'm very happy, and it makes sense to me because, again, like to go to our point before. And by the way, for those who don't know, I hold a significant position in Bitcoin. You know what I mean, as well as many other
As
assets.
do I. Yeah, for
Yeah,
sure.
what I
Yeah.
mean. So we're not just dogging on that dogging, but it's a very real element out here in the community, right? That we deal with that a lot about maximalism and all that
Yep.
stuff. But stable coins is where it really woke up TradFi, I believe, because stable coins are all about utility. And what it is provided is that
Yep.
first place where it's like, you've just shown me how I could use this in my everyday business. Finally, right? Instead of the
I'm here.
speculative argument being made by so many of us out here in the retail community, it's now a situation where it's like, no, this can really affect traditional finance, and we can move money like the speed of light now.
Yeah, no doubt.
And that's waking everybody up there. It's the best thing that's happened.
Well, and it's also when you think about all the things that have happened this year, you kind of look back at 2025, it has been a blitzkrieg. You know, obviously Genius Act has moved. We've started to see movement, obviously, on the Fed rate cuts. We've seen so much advancements in the S&P 500. Gold is over 4,000 an ounce. Silver's cracking like crazy right now, heading to $60. This is crazy in terms of just the opportunity, because when you look at that and all the great things that have happened this year, where is the bearish nature of where the market is? Why do you think we're in a position right now where Bitcoin is still holding under a 100,000? You've got XRP struggling between $2 and $2.30. Why do you think we're seeing that? Is it all Fed rate cut and this whole pressure of tariffs? What do you feel it is?
I think it's cumulative. So I think a little bit of everything's playing a role. We need the rate cuts, right? Tariffs have certainly had an effect on the market with the uncertainty of how people are going to reinvest, knowing that.
Yeah.
And by the way, it was a period of time we weren't sure who's actually going to go for the tariffs and who's going to make a deal.
Right.
So there's that uncertainty inside that dynamic. And then there's the market infrastructure bill, Paul. This
This is a big
bill,
deal.
this is a big deal. I mean, people, I think a lot of the, my listeners certainly understand this, because I won't let it go. And I'm like a dog that gets a bone, won't let it go. And I'm not afraid to talk about the same thing if the same thing is still the point that needs to happen.
Yeah.
And the market infrastructure bill is the biggest piece of legislation to set this market free that we could have and that we haven't had up until this date. And it's possible we see a markup for a floor vote before this month is over.
Mm-hmm.
So we're literally living through history of the next wave and iteration of the internet.
So you have a growth right now of not only the market itself, but I would just notice some news out there. Obviously, XRP's velocity hitting record levels. This is all on-chain activity surging for obvious reasons. The ETFs are flying in Wall Street. We're seeing almost every major fund manager out there starting to jump in, and they're all winning, pretty much. I think it'll be interesting to see where these are in 90 days.
Yeah.
Because we're going to easily go to a billion, I think in the first 30, and maybe possibly in excess of that if we see an acceleration toward end of year. When you look at just XRP as a whole, how do you feel the average person, because we're getting a lot of new people in our channel right now, how do you feel they respond to XRP, ETH, Bitcoin, because those are the top three?
Yep.
How do you feel they respond?
I think, obviously there's the learning curve of figuring out the difference between Bitcoin, Ethereum, and XRP.
Sure.
But I think once they start to navigate through that, right, and realize, okay, Bitcoin's throughput and its transactions volume and all that stuff, it's not built for payments, right? It was, the white paper was, right? But that isn't where it's landed. What's happened now is that Wall Street has hijacked Bitcoin. And I think that also plays into what you were asking, like what's holding this market down. Wall Street's playing a role in that too. And they're currently shaking Michael Saylor's MicroStrategy upside down by the pant legs here, trying to get the change out of his pocket.
Isn't this crazy what's happening with Master right now?
This is the moment we're in, right? So, I mean, I feel like with XRP, because from its inception was designed to work inside of a legal system, it was designed to work within the traditional financial system.
Right.
And because the traditional financial system is not yet allowed to use it in its daily business flows, because we don't have the market infrastructure bill, right? So just a week or two ago, I think a couple of weeks ago, the CEO of Ripple, Brad Garlinghouse, had said, on stage with Tom Lee, that we still don't have a global consensus yet. He's 1,000,000% right. And once we get the largest economy of the world to pass the most important piece of legislation for this innovation to take off, you're going to see that consensus come together quite quickly. And in fact, to my point, the UK just made some changes towards crypto, calling it property. We just saw a readjustment of tax on crypto in Japan. These are G20 nations.
Yep.
Right.
Yep.
So that
from
consensus is coming.
20.
Yeah, that consensus is coming, I believe.
That's huge. Here you've got Garlinghouse arguing the bearish mood around Bitcoin. He's actually arguing that Bitcoin could go up.
Yeah.
And it's interesting because you look at where Ripple is as a company, because they continue to accelerate on this. You think about the things that are happening right now in the macro environment. I want to kind of step back into quantitative easing for a minute. Where the Fed is today, which, as you know, and we just talked about, Chair Powell and his position, but now you've got Kevin Hassett, who comes in, pretty much now he'll be on autopilot, Powell, after I think January's FOMC.
Yep.
Once that occurs, because I don't think we have another one to March, by then you're going to be on autopilot moving into the transition.
Yeah.
Okay. So do you feel that we'll have baked in market reaction to quantitative easing by that time? Because this is a window that we're in right now. Tightening ended this week on the 1st, 3 days ago. And there's always that little gap between tightening and where easing starts to take off.
Yeah.
When that occurs, most of the time not most, all of the time we're dealing with up markets on risk assets. What do you think that timing is going to be with all of these working parts now in play?
Gosh, that's such a great question. I don't know the answer. I mean, we know what happens, when they start quantitative easing, right? People start putting money in the market starts going crazy.
Yep.
How long that gap is before we could see that handoff to the markets, I just don't know, Paul.
It's got to be triggered by these rate cuts.
Yeah, I definitely think the rate cuts are going to trigger a movement for sure.
Yeah, and we've got an FOMC meeting here in 6 days as we record this on December the 10th.
Yeah.
The likelihood right now, at least the probability on Polymarket, is saying we're going to get a cut. We're going to get a quarter. If it comes out and we get a quarter in December and he throws in another quarter in January, that could start to really start humming the markets, which I guess the question is, does Powell want to go out as the Fed chair with the markets humming or the markets crashing? Think about that.
Well, let's add a little wrinkle into this too.
Okay.
Because we know the rate cuts will set the market in motion. But we also understand that rate cuts cause dollar strength, right?
Yep.
And if dollar strength happens, then we're offsetting where things are happening in Japan with the reverse carry trade, right?
Yep.
And we could put all these other countries stressed more than they are right now. As the dollar strengthens, it causes more pressure on other countries and their dollar markets, right? So I definitely think rate cuts obviously signal, a positive, effect for the crypto markets for sure. But we got to understand that there could be a dollar debasement conversation in these rate cuts if they're really extreme, which would be about a great reset and resetting that dollar debasement with the rate cuts. You're stimulating the economy again, but you're debasing the dollar. There's this, it's a shell game. Like we're moving everything around.
It's definitely walking on a wire, no doubt.
Yeah, they're doing open heart surgery on the financial system while they move us to a digital on-chain economy and full-on tokenization while the patient is alive and running, right? So
this is something that Franklin Temple and we were discussing in reference to this liquidity unlock that is about to occur. And here was the thesis, is that, remember, forget about the idea that it's just money markets sitting out there that, once the rates fall, money markets will evacuate looking for a new home, right? Because you're no longer getting 3 to 5% for your money.
That's right.
So everybody's going to say, wait a minute, I'm down to 1%. This is stupid. I'm going to move it either into DeFi, make it work, buy some stablecoin over there, or start dropping into some assets, right? But something that Franklin Templeton said to me was astounding. And that is, don't even think about money markets only, Paul, because what you're dealing with is a massive shift of multi-trillions that are not even in money markets. Right. They're just sitting in private accounts, private equity, that they can't move because it's so difficult to move money and make it work.
Yeah.
Versus if you get to a world where it's all digital on-chain economy and all of this is literally, it's a wallet economy. You no longer have bank accounts. You have a wallet where you can self-direct automatically or get into agentic AI. This unlocks so much liquidity, like that in a very short period of time. I asked them how long, and they reluctantly told me 1 year.
Wow.
1 year before Wall Street would be able to activate that kind of liquidity onto the blockchain.
Well, to your point about that, I just saw the clip with the SEC chair, Paul Atkins, who, by the way, may go down as the greatest SEC chair in history for the second
May.
time sitting in the seat. He literally just said tokenization is the way the world will be.
Yeah.
And it may not take 10 years, it may get done in just a couple.
Right. Yeah.
That's
Well, the
to your point.
acceleration, I
Yes.
think just the introduction of AI at this time for companies who are trying to advance. I
Yep.
look at it just how much it's changed our businesses in less than a year. We've been able to amplify, analyze audience better, build all sorts of new tools. And now, I mean, it's crazy what we can do with AI now in our business. So you can imagine what sophisticated money managers could do, sophisticated innovators could do with
Mhm.
technology like this that's only increasing in quality.
That's
It's
right.
not going down, it's going up in quality. That the acceleration point to your whole situation, yeah, you're right. We could be in a very fast moving, position going forward,
With some
which is huge.
fragility, right? Because
Yeah,
depending on what market you're in around the world, whether it's Japan or Germany or US or wherever you're at, one of the biggest things that I think is missed in the conversation of crypto is why it exists at all,
yeah,
right? And of course, there's the white paper from Bitcoin, and decentralization, the whole libertarian movement. I get it. You'll never convince me that it's not a three-letter agency from the U.S. government that created
yeah,
it, and that's fine. And who knows? Maybe the other top dogs were commissioned as well, right? you know, I could speculate for days on those things. But what I'll say is one of the biggest things that I think is missing from the conversation of cryptocurrency is the understanding, the fundamental understanding that the world needs a new money.
yeah,
And it needs a new money without challenging the dollars of the old world. And that's where Bitcoin made a mistake in the very beginning. It
bingo.
challenged it. Now Wall Street has hijacked it and turned it into an investment product. Digital
Yeah,
gold, they say, right? That's
yeah,
the story. So if you think about that and you think about where we are, and if you come to this crypto world understanding that it was really about preserving the US dollar dominance for the next 150 to 300 years on a new digital system,
yeah,
and that's why Bitcoin was created with only 21 million, so it could offset the debt very quickly by getting the citizens of the world to put their money into Bitcoin and then offset the debt for the US government when they have a strategic reserve.
yeah,
Maybe it's just that they offset the debt that way with Bitcoin, and then they use infrastructure like XRP Ledger and other protocols out here of the real movement of money, getting the friction removed from the system, the velocity of money happening at a level. And then in the interim, you have to worry about these different dynamics of dollar strength versus Japanese yen and all this stuff going on.
oh,
And
yeah,
isn't that the point where a bridge currency can save a nation?
yeah.
Because
Well,
I
this
could
is
move
all this
into that.
capital's got to move.
That's right,
This is.
and I could move into that bridge currency for the troubled time that I'm in.
Hmm.
And XRP could be that safe haven, that island I move to, almost like the way money sits in a money market fund right now, waiting for the markets to open.
Think
That
of, think about that too. You got bonds, commodities. You
exactly.
could even go into supply of what I think will eventually be a huge, maybe a huge asset sector, and that is data center equipment. At some point, you watch.
Well, think about it because I mean, you make a fantastic point. Like, where are these AI centers? Where's all this data collection?
Yep.
I
Cloud
said this to my
contracts.
son the other day. I said, if you wanted to get into an industry and you're not sure what you want to be in, you could certainly be an electrician for the next 30 years because they're going
Oh,
to need
and
to
just
build
the data
AI
centers
centers.
alone. Yeah,
Just
we
data
don't have
centers
enough.
for AI.
Yeah.
We don't have enough for the next 20, 30 years. You don't have enough. Right. So, and
Yeah.
that to me, I think you're really hitting on it. Yeah.
Well, and the point is, it goes back to the beginning of our episode today, is really the sovereignty of what crypto is representing globally.
Yeah.
The fact that we see a clear line in the sand between what the U.S. is doing
Yeah.
versus what the Eastern countries are doing.
Yeah.
I think the ones that are on the fence, I'm still curious as to how this is going to play out in the EU, how this is really going to play out in the Middle East, even though I know Saudi is starting to make inroads with the United States, probably because of because you got to bet on a horse here. You got to bet on either China or the United States to win the AI. Whoever wins AI wins crypto.
I think that's right. And I tell you, to your point, you said people got to pick, they're going to, countries going to have to pick where they're going. And I think one of the metrics of that are countries that don't have a strong economy or a strong dollar in their own country
Yeah.
or with their own governments. That's a
Mhm.
problem. And then the ones that don't get on to this first mover advantage, those are going to be the first low hanging fruit that end up getting white labeled by the big player, right?
Bingo.
So you're
Yep.
going to get white labeled. Now you're using a Chinese digital yuan, right? Or you're using a digital US dollar
Euro. Yeah.
because you
You name
or
it.
a euro because you didn't make that market move to give your country the chance, or maybe your dollar market for your country wasn't strong enough to even have a conversation.
Yeah. Well, I think the key thing here, of course, is how does this all come together at one time? Whether Besant is going to be the one, I think he may be there for multiple administrations.
Yeah.
If Trump anoints, whether it's a Vance or someone like that, you know, um, I don't know. This is going to get interesting in this next year, especially with the midterms, because the political landscape still plays a massive role in this, and
It
and
does.
I think that's why it's so important, obviously, to get the Clarity Act through. Hopefully, that will get done. I was talking to Ron Hammond just the other day on this podcast, and he's a little concerned because you got the defense spending bill coming up in January. You also have the government shutdown potentially going to happen again at the end of January. Those things could get in the way of clarity, and then you start to run the risk of it getting pushed to the side because of the midterms. That's a real problem if we don't get clarity in place before the Trump administration steps out.
I think that's a fantastic point you're making. I just had somebody in our private group last night make that same point. Super smart guy. And just thinking about that, it is a very real element. Where I come back to is this. There is political posturing, there's always political grandstanding. We saw that in the last shutdown, right? And obviously these people don't embarrass very easily. They may do it again.
Yeah.
But I will say that they are aware, because they're politicians, you better have some kind of upside, because the country is not buying that you need 1.5 trillion to keep illegal aliens in swing states so you can
Yeah.
tip the vote for your own party. They're not coming off of it, and the country is not upset about the fact that money was shut down or the government was shut down. They were upset that the Democrats voted to keep it shut down
Yeah.
for their own personal agenda. And I think the elections are coming, and if the Democrats don't see it, you're going to have a solid red set of seats in the House of Representatives and in the Senate. That's what's coming if they don't wake the hell up.
Wow. So you think no blue wave in midterms?
No, that because the reality is everybody understands what's coming, right? Like, I
Yeah.
mean, there's no opposition to what's happening here. Everybody's glad Sleepy Joe's gone. I talk to people that are Democrats, and they're like, "Look, I'm not going to say it to a bunch of people, but I mean, the
Yeah.
guy didn't know what the hell is." That previous administration was a mess, from suppression of crypto to just
Yeah.
how they ran the government, right? So,
Yeah.
I just don't see like how this last shutdown gave them any favor with their own base. They're losing their own base. But Paul, I'll say this about politics, which I don't fool with too much. I think what is being called the golden age for America is also what I refer to as America's first renaissance. We're a very young nation.
Yeah.
And a renaissance like Europe had was a discovery of innovation and
Hmm.
art and a rehypothecation of medicines and technology. Isn't that the moment we're living in now?
No
This is
doubt.
America's renaissance right now.
Yeah. And if Trump is the most market conscious president, I think in modern history,
Yeah.
this is going to translate
Yeah.
into kind of this implicit idea of do no harm stance, which you think is the way you got to do it, which
Yes.
eventually this moves into important crypto assets like what XRP is trying to do. The SEC is one of the key things he's got already under his belt. The Fed is the next one. And I think once you get the Fed, the SEC, and possibly the IRS starting to correlate into a true pro innovation,
Yeah.
because now you have the two big tools presented for mankind that have never been here before: crypto and AI. all happening at the same time. So
It's such a great point. I just say this as a touch on the politics, and the Dems and the left side of the aisle when it comes to this market infrastructure bill, their biggest argument is that Trump's family is heavily in crypto,
yeah,
right? That's the biggest argument, that he's
sure.
off running, ruling the roost, and his kids
No
are
doubt.
the foxes in the hen house, and they're going to put the legislation through, and you just expect us to vote through this through so your family can get rich. Well, if the whole world's involved, the whole world can get wealthy, right?
Bingo.
Like to your point, this is the technology that allows the small guy and player to build their life out of the poverty hole that they've been born into or whatever, right? But I'll also say this, this is where it comes down to political posturing and all of this, grandstanding. The Dems didn't have a problem with Nancy Pelosi making hundreds of millions of dollars from inside trading with the knowledge that she had.
Well, and
Not one pushback on
yeah,
that.
not one pushback. And you have to remember too, there is so much corruption in there that we don't even see.
Yes.
All right. You can at least say this about crypto. Nothing is hidden.
Exactly.
It's all out there on the blockchain
And
all
to
the
your-
time. So
Yeah.
and
To
it's
your
being
point.
analyzed left and right now and micro analyzed, which only makes you either act right as a good actor, which is really what you should be doing anyway in politics.
Yep.
I think you put every one of the decisions on the blockchain coming out of DC.
Yes.
And to where that can be analyzed and scrutinized instead of these backroom board dealing deals that are always being, and everybody would say, well, it's national security or it's this or this, that. I'm like, I understand national security is fine, but being able to go out there and bet on a stock of Lockheed or, Raytheon or you name it, because you know what's getting ready to happen, that is insider trading, boys. That's just simple and succinct insider trading.
Exactly. And if you look at what the Trump family's doing, albeit politically, it adds a stick in the spokes for the conversation of legislation, for sure.
For sure.
I recognize that. But at least these guys aren't doing insider trading. They're putting their own real working money to work in this space because
they're
they
leveraging what the system is letting everybody leverage into.
Exactly. We're all here. That's what I'm saying. That's why it's like a moot point with the Democrats and what they say about the Trump family. Ultimately, at the end of the day, everybody has access to the system. They're not doing anything that we are all not aware of.
Bingo.
That's the change. And that's really the difference here.
Or have access to in reality.
Yes. And I believe ultimately, I think the Democrats do get that. And I think they've worked hard to have some half-assed version of a voice by stalling and shutting the government down. But at the end of the day, I think they realize if you don't put this market legislation through, they buy sneakers for their kids on Capitol Hill with U.S. dollars just like we do. And that's what this is about, first and foremost.
No doubt. Listen, you guys, if you're not following Brad Kimes and his channel, make sure and do that. Digital Perspectives doing a great job over there. We always love to have you on the show, Brad. As usual, it's a conversation that goes across the spectrum. So hopefully you guys learned something out there today. I always do when I'm talking to Brad. So make sure and like and subscribe right now. And Brad, thanks so much for coming in today. We appreciate it.
Paul, thank you. Your work means a lot to me. I've told you this off camera, on camera. I'll say it again. You're doing really incredible work out here. You've been you've been an expert in this field for a long time, and you've been an expert in fintech in this space for a long time that people don't understand that about you. But I tell you, the way you're cutting the ice out here and really giving people, I think, the most they need to get whether it's covering the traditional markets, rate cuts, economy, AI, innovation, robotics, crypto, you name it. You're the guy who's on it, and I couldn't be more honored and privileged to be on your show, but also to have you at XRP Las Vegas. I can't be more excited, man.
It's going to be fun, man. We're going to have a big one. That's coming up in May. What are the dates again?
April 30th to May 1st, and it is at the Paris Hotel. You can go to xrplasvegas.com, get your tickets and your discounted room link right on the website, and come see Paul in person, and everybody else is going to be there.
It'll be fun. It'll be fun. Last year was so amazing. We got a chance to talk to so many new people and really get a chance to see the XRP community. So if you guys did not come last year, this is the year to do it. So you guys know what to do. Like and subscribe. And thanks again for stopping in on another episode of the XRP podcast. Take care.
Thank you, Paul.